And as promised, let's talk to the management of Borosil Limited just to get a check on demand trends and the business outlook going forward as well. We are joined by Shreevar Kheruka, who's the MD and CEO at the company. Shreevar, good afternoon. Thanks a lot for joining us. I just wanted to get a check on how demand has been in Q3. We did see some margin compression in Q2, some decline in revenues as well, not revenues, profitability as well. How are trends right now in Q3 and how was the festive season?
Well, first, thanks for having me. We've seen a very robust demand all through the festive season. So Q2, the demand has kind of flown over to Q3. And we see in general, India is in a bright spot for end customer demand. And this applies to both our scientific as well as our consumer divisions. We see really a very enthusiastic end offtake. As far as margins are concerned, obviously the margins in the first half were impacted by high inflation. Inflation has since cooled off. We unfortunately had a little bit of a delay in our project implementation for our new production unit, which is delayed by about 3 months. And this also has impacted our margins to some extent because we had to buy more material from outside versus producing it ourselves, which has a detrimental impact on the margin. So some of it, I would say the macro scenario has improved from an inflation point of view, but micro for us, we'll probably have one more quarter of some pain as far as margins are concerned.
Okay, so you spoke about two things that impacted margins. One is delay in internal production capabilities and also raw material prices as well. Now, where does it stand? Will you be able to utilize your internal produce for usage as raw materials? And how much have raw material prices fallen by?
Well, there's two aspects. I'll address the raw material pricing first. There's two aspects of pricing. One is when you import raw materials, you have the cost of the material itself and then the freight. So I won't say the cost has fallen much, but the rate of increase has stopped, meaning to say that the prices are flat. However, the freight is what has fallen. So there's been a substantial reduction in container freight rates, which has therefore impacted or improved our landed price of various raw materials. And that's really what's driving the benefit for us. As far as but on the other side, also anything imported in dollars, the rupee has depreciated, in the last few months. So it's kind of more or less at zero in terms of the reduction, but there's no increase any further, which itself is a boon.
All right, that makes sense. So what do we expect in the second half of this year? You said that, the consumer business was extremely strong for you. That's about 70% plus of your overall business. The first half of this year, you've done revenues of almost 9% in terms of growth, margins around 16%. Second half, are we expecting you to do better than the first half? And if yes, how much better?
Well, actually, I think my numbers are much higher. The consumer business grew high double digits, in fact, in the first half of the year. And I think that will continue in the second half as well. So I think we were more than 30% up in the first half, and we see substantial, let's say, traction even in the second half, and that growth momentum to continue. And like I said before, the production, our own production, will kick in now at the end of Q3, which means in Q4 that our margins ourselves should further improve again. But growth-wise, I see the trend, the momentum of the first half continuing into the second half.
Right. I meant the overall business, not just the consumer business. The overall business has grown just about 9%. And that brings me to my follow-up on the pharmaceutical business as well. Post-pandemic, what's the kind of lab demand that we're seeing? Because we did see a big dip in the pharma packaging vertical, 35% dip year on year. So what's the outlook on that one? And as a result of the overall outlook for the second half?
Yeah, so that's probably correct. We had, last year, the pharma packaging business grew by 60% the year before, and that was primarily driven by, COVID sales of various therapeutics or, injectables for COVID. That went away this first half of this year. Although now we've seen, substantial export demand on the pharmaceutical packaging side, and I do believe the second half of the year will be much better than the first half. And we will probably show growth versus the last half. So versus a minus 30% in the first half of the year, the second half of the year should have some growth over the last, year. So on the scientific side, I'm pretty certain we'll have a good growth in the second half.
Okay, so good growth on the scientific side expected in the second half. I wanted to speak to you about the demerger timeline as well. The last when we spoke was when the NCLT approval was recently approved for that. How much more time do you think this will take, and by when will the two list separately?
Yeah, so that's a great question because that's something we discuss fairly often here. The challenge is the timelines are not really in our control. There's many regulators who are very busy with many things going on. But the latest update is NCLT has asked us to have some meetings for various stakeholders in the first week of February, which we will do. And post that meeting, I think it should take between 2 and 3 months to actually get the final approvals, and the listing takes probably a month more. So say 3 to 4 months post-February, we should be on good grounds to have then two separate listed companies.
All right, that makes sense. Let's talk about your verticals individually then. You have given us medium-term targets for both your consumer business as well as the pharmaceutical business. And for our viewers, I'll just spell them out. For consumer business, you expect a revenue compounding of more than 20% with improvement in EBITDA margins. And for your scientific products business, you expect a revenue compounding of 15%, maintaining EBITDA margins at current levels. And you are also targeting cash flow efficiency. So if you would give us some more color on this, for the consumer business at a 20% revenue compounding, what is the sustainable margin level, and what is the cash flow efficiency that you're looking at in your scientific business? I mean, what are the working capital days right now? How much are you targeting them to come down by?
Yeah, so well, I think the consumer business, we will maintain that growth, that CAGR growth of 20% plus, in the short to medium term. In terms of margin profile, you see, I think there's a big shift. We were importing a lot of products from various countries. And with this push of Make in India, we are also actively investing almost 600 crores in manufacturing in India. And that's going to help improve the margin profile. And that EBITDA over the next couple of years on the consumer side should keep rising and go north of 20%. And that's really the focus or the target for us, to maintain the growth as well as improve the EBITDA percentage on the consumer side, which I think we're well on track to achieve. On the scientific side, yes, I think 12 to 15% CAGR growth should be anticipated, and there the EBITDAs are slightly better. They're already north of 25%, and that's where we should maintain them. The cash flow efficiency, when I mentioned, it is actually for both the businesses, because we do have a challenge when we import product. That is, you need to buffer in a lot of let's say supply chain challenges and so on. So you have to have more inventory. Whereas when you produce ourselves, naturally we should see almost a 30-day reduction in the working capital cycle. So which the working capital cycle, if it's 120 days now, it should go down to 90 days because your inventory can go down. So
Okay.
and that will be applicable for both the businesses, both consumer and scientific.
Okay.